Sharma, good morning. Thank you so much for joining us. We understand that NII is not absolutely comparable due to the one-offs, but for the benefit of our viewers, can you help us break down the NII growth that the bank has clocked, and what are the factors which are contributing to this growth?
Okay, so thank you very much and good morning. So first of all, I like to mention that bank has shown overall growth in all the efficiency parameters, and the guidance note which we had given at the beginning of the year, we have been able to achieve all the factors, including ROA, ROE, and net NPA extra, and slippage also. So now coming to your question that the NII. So as you have rightly said, in fact, the last year June we had received some special recovery from Kingfisher, which was accounted for net interest income also, and the return of other income also. That was around 868 crore. So that is why the base numbers are little, not comparable. But overall, if you see the net interest income, QOQ, we have been able to show growth, and QOQ there is 3% growth. So if we analyze it, may become around 12% growth. So in all the QOQ numbers, we have been able to show improvement in including operating profit, net interest income, and other income also. So basically, it is contributed by the growth in advances, because we had estimated 12% growth, and we have been able to achieve. This is first time that we are showing growth in corporate and mid corporate advances also, apart from retail. So overall, now the bank is on right track, and we will be able to show growth of 10 to 12% over the entire year.
Right. So by the inference, Mr. Sharma, is your current NIM post one-off adjustments? And then what is your NIM guidance going forward? Because I'm sure the street is waiting for that figure.
Yeah, in fact, every quarter there are some one-off income will be there, because we are affecting good recoveries, and part of it goes to interest income. But internally, to monitor our net interest income and net interest margin and NII also, and the other ratios, we calculate the excluding one-off what will be the number, and that is why accordingly we have been given the guidance. So the it is 4.02. But if you exclude that income tax refund, this time also we had received around 178 crore. With that, in fact, we have been able to finalize all the income tax refund more or less. So that if we exclude that, it will be 3.73. But then again, in recovery also some interest had gone. So if we exclude that also, pure from business, it will be 3.26, and which is above the 3.25 guidance note which we have given. So throughout the year, we are ensuring that total core NIM we will be able to maintain at more than 3.25%.
So when we just look at the way ahead for the banking sector, credit cost was a big issue for the last 10 years across companies, especially in the PSU space. You think that credit cost is now reversing, and also we are not hearing big corporates now, doing defaults in the last 1.5, 2 years?
Exactly. In fact, now after that AQ exercise, and then of course the post AQR effect also, most of, I think, the banks have taken corrective steps, and now the quality of advances have also improved. And especially if I mention about my bank, this time, of course, this quarter there were some two corporate slippages were there, but that was expected, retail to retail accounts. Other than that, in coming quarters also, we are not expecting much slippages. After including those two accounts, our the slippage ratio annualized basis is 2.5%, and next quarters onwards, the coming quarters, we will be able to keep the slippage ratio below 2.5%. Second, credit cost, as you have rightly mentioned, our credit cost for the current quarter is 0.52. Earlier, we had projected a credit cost of 1.25%, but we have revised the targets downwards, and now we are telling that our credit cost will be less than 1% throughout the year, and that we will assure. So overall, in all I think through all the banks, and especially I can mention about my bank, the credit cost is declining, slippage ratios are declining, and the banks, I think, they are showing good results, and so we are.
Is likely to be below 1% mark, and a lot of optimism around earnings. But Mr. Sharma, the big story is really around the divestiture by the government, right? And you have been participating in a lot of roadshows as well. Can you give us an update with respect to what kind of response you have seen, and any word coming in from LIC where their stake is headed?
No, like first of all, I would like to mention that this investment process, as you know, is being handled by the government of India, by their DPAM department, and ultimately, government of India and LIC, they are the owners, so they will decide when to divest, how much to divest, and what terms will be there. But certainly, yes, the road shows were it was pre-road shows basically. The purpose was to understand the nitty-gritty of the transactions and how the interest. But of course, I'll not be able to comment much on that, because once the process is on, you will know. And according, as I said, DPAM and of course LIC, they will decide how much to divest and when to divest.
Any update on the timing of that? At least you can give us some clarity of what's the update in terms of the latest, what you've heard from DIPAM?
So far, I'll request if this question can be asked to Deepam. So I think they will be in a better position to answer. But my focus, as I have always been telling, that my focus is to improve the performance of the bank, and that you have seen during the last 3-4 years, the bank is showing continuous improvement. So that even if government of India or LIC they do disinvestment, they should be able to get the proper pricing. That is of course one. And second is that otherwise also efficiency, like ROA, we had projected more than 1, so we have been able to achieve. That's a good I think landmark, and ROE of 14.80%. So my focus will be to improve the performance parameters of the bank and show continuous growth, and that we will take care.
Sharma, great to have you on the show. Thank you as always for speaking with us on ET Now.
Thank you very much. Thank you.
Okay, that's the word.